How much are you willing to lose in a trade? What is the reward you would like to get back for taking such a risk? These are crucial questions you need to ask yourself before you enter a trade. The answers vary from trader to trader, and there are ways to calculate the risk-reward ratio. Ideally, you will want to have at least a 1 to 3 risk-reward ratio. In other words, you're willing to lose $100 to make at least $300. Let me give you an example. This is ACHN. The current price is $13.90. Before I enter this trade, I want to know how much I'm willing to risk and what my profit target is. When looking at the chart, I feel comfortable in this trade as long as the price stays above $12.70. If the price drops below the pink box, I'm going to be out of the trade. If I enter at $13.90 and I'm out at $12.70, that means that I'm willing to risk $1.20 per share. Since the risk-reward needs to be at least 1 to 3 ratio, if I'm risking $1.20, my reward needs to be at least $3.60. As a result, I will place my protective stop at $12.70 and my profit target will be $17.50. Therefore, if I buy 100 shares, my risk will be $120 and my reward will be as close as possible to $3.60.